skeptical about what's happening here, Damien, and suggests that someone wants a default here.
Yeah, no, I mean, that is where you're headed there is the deep, dark place, right? Can the U.S. government actually force these companies into default? I mean, I guess technically they can, but do they want to? And do they want to be perceived as doing that? We all talk about the de-dollarization trend. The yuan's going to take over as the reserve currency, writ du jour. Look, I'm not adhering to any of that, and it's certainly not happening anytime soon. But I get it. You know, how will foreigners react if in terms of their confidence in the U.S. dollar? If the U.S. government can force companies into default and seize their assets, I mean, that's not a recipe for success, in my opinion.
Working out all of this is just fascinating and hard work. Damien's going to do that all day for us. Damien Sassan there of Bloomberg Intelligence. Thomas Severstal becomes the first Russian firm to run out of time to pay a coupon on its debt.
I'm fascinated here more than anything of the relationship of the United States of America with an international bank like Citigroup, John. To me, I get the Russian thing, but how does Western finance, how does international finance adapt to this? Who's going to police the big banks?
Who wants to be the bank that makes a mistake? I mean, it's all well and good that Severstal comes out and pleads with the bank to send the money and tells the investors to plead with the bank to send the money. I mean, Tom, can you imagine the fine they get if they do something wrong here? We're talking about billions, potentially. They don't want to touch that.
Yeah, well, again, it's a movable feast to me. It ends up, and maybe it is Secretary Yellen. I mean, maybe it's the Secretary of Treasury that really starts to make tough decisions in advice with the President of the United States.
Winnie Caesar joins us now, the Global Head of Strategy at Credit Sites. Winnie, help us understand if what we're describing is a credit event. If a company wants to send money to its end investor, but the money can't get there.
That to me sounds like a credit event. I mean, we are on amateur hour, so I think that we're all kind of navigating this new world and new regime with not a lot of precedent to guide us, but in terms of end investors ultimately getting the cash that they're owed from coupon payments, that it's definitely a credit event, and you can have these technical defaults triggered quite quickly in this type of situation.
But is there any ripple effects from this, Winnie? Is this contained to Russia?
So I think that is what every investor is asking themselves right now, because we have seen in the markets the sensitivity to headlines begin to decrease pretty significantly. Initially, when we had more financial sanctions headlines, more Russia-Ukraine headlines, markets would move quite rapidly. And now kind of that tolerance for a little bit of the risk that is associated with these events and the potential fallout has increased a little bit. And I do think that there is a lot of uncertainty around the second and third order consequences of the magnitude of financial sanctions that we've seen put on these companies and people as well.
Winnie, the first order condition is yield up, price down. Are we in a bond bear market, or how do you identify a bond bear market?
That is a very tricky question as well. So I think that given the magnitude of return losses that we've seen in the corporate credit markets, we're basically on par with the great financial crisis in 2008 in terms of total return losses or losses that are flowing through portfolios. For most credit investors, that feels pretty bearish overall. Now, the silver lining here is that we've seen yields move to a point that we have not had on any sort of sustained basis since 2017. And that is making bonds look much more attractive from a carry perspective. I don't know that investors are necessarily convinced that we're going to all of a sudden see kind of the sunrise tomorrow and it's going to be all clear and all of a sudden we have this massive compression trade like we had in March 2020. But in terms of actually being able to earn some income on your investment, it feels like we've approached a much more constructive level.
Winnie, thank you. Winnie Caesar there of Credit Sites on some breaking news in the last 10 minutes. This came from Citi just moments ago. Recent Fed speak suggests a 50 basis point hike in May is likely to have broad support. Okay. Goes on to say the median Fed dot for appropriate policy rates at the end of 22. Tom, wait for this. Could be around 3% at the end of June, up from 1.75 to 2%. So think about that. The next SEP comes out in June. They've just produced one, and it has rates at the end of this year at 1.75 to 2. Citi suggesting those projections could come up to 3% for year-end this year.
My immediate answer, John, is where does that put the terminal value? No one is framing out a new terminal value higher. Adam Posen was way out front on this at the Peterson Institute about a new terminal value. I mean, they said 3% inflation. People said he was nuts. Is that the new terminal value?
That's the Fed. The NATO meeting just wrapping up as well, Tom. Just getting some word from one official. The Zelensky urged NATO leaders to increase support. Didn't reiterate a call for a no-fly zone in NATO remarks. Some other headlines pouring through here as well. We'll pick that up in just a moment. From New York, this is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Rutika Gupta. President Biden and the group of 7 nations have a warning for Vladimir Putin and their meeting in Brussels today. In a draft statement, the G7 tells Russia not to use nuclear or chemical weapons in the war with Ukraine. There's been concern that Putin may resort to drastic means if his troops keep getting bogged down. The highly respected governor of Russia's central bank wanted to resign after Vladimir Putin ordered the invasion of Ukraine, but Bloomberg's learned the president ordered Elvira Navalny to stay. Navalny was nominated for a new 5-year term at the bank last week. A steelmaker has become the first Russian company to run out of time to pay interest on a foreign currency debt since the war with Ukraine began. The company Severstal says it's eager to pay the $12.6 million bond coupon, but Citigroup, the correspondent bank of the unit issuing the debt, blocked that transaction. Severstal and its controlling shareholders are not sanctioned by the U.S. The Senate Judiciary Committee is expected to vote April 4th on the nomination of Judge Ketanji Brown Jackson to the Supreme Court on the second day of questioning. Jackson again defended her record on sentencing criminals and explained how she decides cases. Jackson's confirmation as the first black woman on the Supreme Court is all but assured because of the Democrats' control of the Senate. And the World Bank has priced the world's first wildlife bond. It's raising $150 million that will be partly used for the conservation of black rhinos in South Africa. The 5-year bond will pay returns determined by the rate of growth in populations of the animals. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists.
Hello traders again. Let's place stop for euro. Okay, I'm going to place stop at 109.89. Please copy this trade, 109.89, and we secured our position. Whatever happened, we will not lose any money on it. Okay, I will change the color for new people so they will understand that this is stop. This is our long position. We got here, we purchased at around 10.25, and right now we place stop for our position on euro, just right here. So okay guys, good trade, well done, and I'll speak to you later. For new people, go to company.co.uk and get the strategy. Okay, stay safe.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
There are areas of our industry or in resources where we're seeing significant demand growth. I think the bigger issue, though, is the tightness of supply across almost all of our resource commodities. I'm hopeful that an agreement will be sorted around Ukraine, Russia, Europe. I mean, the world cannot afford, and for the benefit of all the people in the world, we can't afford to keep going down this road.
Mark Kudafali there, the longtime Anglo-American CEO, hopeful about the future. This administration in America fearful about what could happen in the near term. Some breaking news just moments ago. Let's get to Bloomberg's Anne-Marie over in Brussels. Anne-Marie Jourdain, the latest, please.
Well, Jonathan, briefed by a U.S. official on what is going on behind me in the building right now with President Biden meeting his fellow NATO leaders, is that they are concerned and they're discussing what would happen in terms of the severe consequences if President Putin were to use chemical or biological weapons. The reason why this is top of mind of many leaders, because the war has drawn out much longer than the Kremlin had expected. They thought this would be a swift operation, as they were calling a, quote, military operation. And also the fact that President Putin has been one to either turn a blind eye when his allies like Bashar al-Assad used chemical weapons in Syria, and Putin himself and his military providing that air cover. Also the fact that he used Novichok in Salisbury in the United Kingdom. But it does come after Jake Sullivan, the National Security Advisor, one day ago said that their posture has yet to change in terms of nuclear deterrence. But this is clearly top of mind of leaders today.
Anne-Marie, and I know you haven't seen it, there's video out on, of all things, YouTube showing a mini Pearl Harbor in Verdansk. One ship destroyed, another ship clearly on fire, heading out to sea, and a third ship maybe with some smoke. Link the military action of Ukraine directly over to the use of chemical weapons by Mr. Putin.
Well, Tom, the war he is invoking on Ukraine is drawing out. It is not what the Kremlin, is not what his FSB military advisors likely told him it would be. We know that his inner circle is incredibly small, and potentially he was given information that is just not correct and coming to fruition. They thought this would be days, not weeks, and what it looks like potentially, it's now 1 month today marking the start of this war. So you do see that as Russia continues to, they're unable to capture the cities the way they wanted to. This is why there is that potential, and this is top of mind of leaders, that as Vladimir Putin continues to dig his heels in, that he may revert to this use of these types of weapons, nuclear, biological, or chemical weapons.
Well, and Anne-Marie, to go back to the idea of deterrence, the U.S. and NATO preparations, including deterrence postures, Have we not learned over the course of the last month that Vladimir Putin has not responded? He is not actually able to be deterred? I mean, how does that thinking have to evolve if by definition it's getting an actor not to do something, and yet Vladimir Putin time and again has done what the West would not like him to do?
Kaylee, I'd argue Vladimir Putin has not been deterred for years. 2008, he went into, and there was a fight, obviously a war with Georgia, and he recognized Abkhazia and South Ossetia. 2014, he recognized, 24 hours later, annexed Crimea. He's used, as I've mentioned, weapons, nuclear, chemical, biological weapons in London, in Salisbury. He has not been deterred to this point by the sanctions the West has used. There is something a little bit different in terms of what is going on right now in terms of posturing from NATO. They are going to be bolstering the eastern flank, and it's going to become very clear.
Okay, guys, as you can see, position closed on euro. We made 500 pounds. Well done, guys. Sorry, oops, it was. As you can see, we purchased euro at this level, 10.25, and we sold just about a few seconds ago, minute ago, at 109.89. Okay, guys, we made 1 pip equals 100 pounds, so we made 500 pounds. If you want to get the strategy, go to company.co.uk. Otherwise, you can stay. That's free. You can stay with us on this channel, on YouTube, on Twitch, on Facebook, on other channels that will produce our stream and make a profit. Okay, make some money, make some profit. Find out from the broker how much broker pays you per pip if you decide to use our strategy, and don't try to wait until you will get huge gains, because this is how we day traders making money, pieces by pieces, small bricks by small bricks. Right now we made 500 pounds. We holding, as you can see, positions on Japanese yen, on Bitcoin. We're waiting, and we also will sell them with profit when we will see that this position will gain us enough profit. Okay, guys, let's move on. Let's not concentrate on only one winning. It's just early time. It's only 12 o'clock in London. So let's see what's going to happen in the next few hours. Okay, I'll speak to you later, guys. Stay safe.
First thing, Ukraine or Belarus were to get physically hit by a stray missile. Number two, because of sanctions, particularly if the European Union were to join the United States in imposing an embargo on Russian crude. Number three, if Russia itself chooses to use its oil exports as a proverbial weapon in retaliating against asset freezes, other economic sanctions. And number four, and this is the one that is probably the most impactful in the near term, private sector decisions by marine shipping companies to avoid taking cargoes of Russian crude. So companies like Maersk have said they will not touch Russian oil as a matter of principle. That means, at a minimum, more costly and more time-consuming for companies like Rosneft and Lukoil to get their crude onto the global market.
Pavel, I know we had a connection problem a little bit earlier this morning with you. Let's do our best to get you back on in the next couple of days. We'll re-establish those things, and we'll get you back on for a longer conversation about what's happening here. Pavel Molchanov there of Raymond James, Tom, with some important thoughts on what's going on right now, right here in this commodity market.
Well, the commodity market is different now. It's not so much the grains. Yes, they're elevated, but it's a summation. And the Bloomberg Commodity Index, John, is very, very good math with very appropriate weightings. I don't have them in front of me. I'm sorry. I don't have them memorized, but the answer's up. We're not to record highs, John, but I think an unspoken story of the last couple of days has been the lift in industrial metals, including nickel, now trading higher.
The focus today on Brussels. This is what's happening. A NATO summit just wrapping up. In about 20 minutes' time, we're scheduled to have a news conference with the NATO Secretary General, Jens Stoltenberg. Then from there, it's on to a G7 meeting and an EU leaders summit a little bit later. The President attending those things, and then on to tomorrow, he'll meet with his Polish counterpart. A lot to get through. Futures up 0.5% on the S&P. Yields higher by 8 basis points. Your 10-year, 236.81. From New York, this is Bloomberg.
Almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan, bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
investors are looking to the Fed and really receiving their message that above all else, the Fed will rein in inflation.
If you have more hikes, i.e. the terminal rate becomes higher, I don't think the markets are priced for that yet.
You need to be thinking about hedging inflation in a multi-asset fashion.
You've got to put your money somewhere, and Treasury is probably still not a great place to do that.
Where else are investors going to go? Equities is really the only game in town.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television. An historic day for diplomacy in Europe. I can't say enough about the linkage of war in Ukraine and what we see in Brussels and beyond. John Farrow, it is a moment for Europe to decide.
The NATO summit just wrapping up, Tom, then on to the G7 and an EU meeting as well. The reporting coming from the team here at Bloomberg down in DC. Josh Wingrove in Brussels right now reporting the following, Tom. According to a senior Biden administration official, the US is working with NATO allies to prepare for the possibility that Russia deploys a biological and/or chemical or nuclear weapons attack, Tom. It's chemical warfare that is something this administration is very concerned about. They talked about that as they got on the plane, Tom, and headed in Europe's direction.
And in a war and in the cacophony of news flow the last couple days, a constructive set of news for the beleaguered people of Ukraine. And John, footage this morning from the Black Sea. We need to be very careful on this. It's not a mini Pearl Harbor, but 3 ships involved in some form of Ukrainian attack. And John, the Russian ships moving out to sea as fast as they can. The backdrop is an ongoing war as President Biden meets.
And President Zelensky, Tom, with a series of addresses, and they continue. He spoke to Sweden's parliament early this morning. He dialed into NATO virtually earlier today. And this is what we understand was not said. And I think what wasn't said is interesting, Tom. Zelensky didn't reiterate the call for a no-fly zone in his remarks to NATO, according to an official. I think that's interesting, Tom.
It'll be interesting to see the sanctions as well. The news has come fast this morning as well. Kayleigh Lyons, the Congress of the United States, wants a tougher tone from President Biden.
I think the domestic population arguably does as well, Tom. And Biden has been willing, by and large, to deliver that tougher tone. He's promised more sanctions to be announced during this trip, targeting certain individuals. But there are certain things that the Biden administration doesn't have control of, including the response of its European allies, who it's much more difficult for to impose any kind of embargo on Russian oil or natural gas, which is why an energy agreement that the administration, according to our reporting, is inching closer to seems really pivotal here.
Equities up today, but John, I am focused, as you're on bonds, I'm focused on commodities. Let me review that. The metals are up, up, up. Maybe the grains don't participate. But just in a week, John, Brent crude at 122.
We're all over the place, Tom. Equities right now up 0.5% on the S&P. On the NASDAQ, we advance again up 0.6%. Yields are higher, much higher, up by almost 8 basis points to 236.69. And if you can pick out one single name, it's not really got anything to do with the big stories this morning, but I think we've got to mention this. This coming from Dow Jones, that Uber has reached a deal to list all New York City taxis on the app, Tom. That's an interesting one. That headline just dropping moments ago.
I don't understand that. We'll have to see what that...
I think it's pretty self-explanatory, isn't it, Tom? The stock up to the races, Kayleigh, up by more than 6%.
If I'm an Uber driver, what do I think?
That's an excellent question, but if you're a yellow cab driver, also, what do you think? That has been the battle here in New York City for a long time. Have you ever tried to use the Curb app? I've never had success.
No,
I've not tried that one, Kayleigh. No?
It's like the Uber equivalent for yellow cab.
Tom's quite anti-Uber at the moment, has been for a while.
Yeah.
I'll go through this story, Tom, to explain it to you.
Please.
Okay, I'll go through that later.
We'll continue right now. The VIX 23.42 shows a trend in the market from the panic of a 35 VIX down to 23. We adjust, with the chief investment strategist at Nuveen. Brian Nick joins us this morning. Brian, what has changed in the Nuveen view since this war began?
Well, what's been remarkable is that the markets, at least risk assets, have really discounted, I think, the worst case scenario in the war, even as it continues to rage and escalate in many respects. But the big change we see is the pricing for the Fed and the rhetoric from the Fed itself. What's been really surprising is that we saw the war as primarily a channel into potentially lower growth globally, creating inefficiencies, leading to lower real disposable personal income growth, not just in the US, but around the world. But markets seem to regard this as primarily an inflation event. So we've had interest rates rise because inflation expectations are rising, and the Fed is adjusting its rhetoric and its policy path to accommodate that. So we're preparing for tighter monetary policy, persistently higher energy-driven inflation, and then I think by the end of the year, somewhat slower economic growth than we were anticipating pre-war.
Brian, let's talk about that tighter monetary policy. This from Citi in the last hour from Andrew Hollenhorst and the team saying the following. The median Fed dot for appropriate policy rates at the end of 22 in the June summary of economic projections, they go on to say, may rise to around 3% from 1.75 to 2%. Brian, can you walk me through that? The prospect of getting the Fed funds rate to 3 by year end.
It only took 5 days for the Fed to go from 7 rate hikes to now all the speakers seem to think they're going to be going by 50 in May, which implies more than 7 rate hikes total for this year. 3% to me feels like the outlier case. I know there's a couple of Fed presidents who maybe would like to get to 3% by the end of the year. That would be a further hawkish surprise on top of what we've already seen. And I think you need to see a justification in the data. The Fed, as sort of one directional that this has been, just everybody pointing to higher rates as far as the eye can see. I think that they're still data dependent in terms of the inflation numbers that come in, the employment data that we continue to see. If that points to wage price spiral, they may be hiking by more than what's currently priced in and what they're saying. But if it's not, if it looks like durable goods prices are rolling over, if the energy price shock doesn't last as long as we think it might, but then I don't think the Fed's going to have to hike by as much. And that would be obviously a far better scenario for the markets.
Does that create a buying opportunity in treasuries, particularly at the short end, Brian?
I do think that if the curve steepens from here, it will be because short rates are coming down, not because long rates are coming up by a lot, because there's so much inflation baked into the cake. We've never seen inflation expectations this high. We've never seen the break-even curve this inverted. Short-term inflation expectations, 2 years, 5% per year over the next 2 years. Now, some of that's oil hedging, but some of that is genuine concern and needing to hedge inflation by hook or by crook. So if and when we start to see inflation roll over, I think you'll see the deflation in the rates happen primarily at the short end, and we could have a steeper yield curve. Again, I think that's a pretty bullish scenario for stocks, for credit, and obviously for short-term treasuries as well.
The year to date has been much flatter. Brian, thank you. Brian Nick there of Nuveen. Wrapping things up in Brussels, that NATO meeting, then onto a G7 summit, then onto an EU leaders meeting a little bit later. We can touch base with Brussels right now with Maria Tadeo of Bloomberg. Maria, talk to me about what happened in that meeting as that wraps up and we wait for the Secretary General to speak in about 8 minutes' time.
Yeah, well, the real highlight from here, of course, is President Zelensky jumping in on this call. Remember, Jonathan, for the Ukrainians, it was a real aspiration. In fact, it's in their constitution to join NATO, but this country has had a major reality check about joining NATO. They now know that this is just not going to happen. In fact, they know that NATO is not going to come to help on the ground, but Mr. Zelensky once again insisted, and this is what he told NATO leaders, including the United States, of course, but everyone else in the alliance, that says Russia only understands the language of force, the language of sanctions. That's why we need to step them up. And then secondly says it's very clear that you don't want to close the skies, but if they stay open, this is a massacre for the Ukrainian people every day. So we ask of you more weapons, particularly defensive, but also means to counter the Russians on the air. Clearly a reference to fighter jets.
Maria, I did the math, and there'll be 472 bilats in the next 3 days. Which bilat matters?
To me, there's two that are key. One will be President Biden with President Erdogan, that is Turkey. Remember, for a very long time, the Ukrainians seem to point that they believe Turkey could actually play a very active role in the mediation. The Ukrainians are disappointed in the Israeli prime minister, but they say, in fact, the Turkish government could provide the best platform. And the Turks have said, okay, we can work with that, and we could indeed set up a meeting between Volodymyr Zelensky, the Ukrainian prime minister, and of course, Vladimir Putin, if that were to happen. Remember, the Ukrainians always say this war is only going to come to an end if Vladimir Putin and Volodymyr Zelensky meet face to face. The other one that to me is very, very important will be Poland and the United States. This is the key country to watch out for in Europe. It's a country that's providing a lot of the humanitarian aid, but in particular the weapons. And we know that Poland is concerned about an escalation with the United States. Of course, we can talk about Emmanuel Macron and Scholz, but if I had to pick two, I would say it's definitely Turkey and Poland.
Whenever the G7, G20, whatever it is, gets together, Maria, they talk about a communique and they argue over a communique, a statement effectively. Are we getting a statement from NATO today? Do we get a statement from the G7, a separate one from EU leaders later? How does all of this come together?
Yeah, but you know, if you look at the actions, I think what we want to watch out for is the number of troops that are going to be permanently deployed to the eastern flank in Europe. We're probably going to get an announcement on that. When it comes to the G7, look, Jonathan, I have to tell you, the conversation is not about the G7, but in fact it's about the G20. And there's many in Europe that suggests if Russia continues to attend and the Chinese are okay with it, it's the end of the G7 format. It's the end of the G20 format. This is dead. This is a format that will come to an end by the end of the year. When it comes to European leaders, you know, tonight we're not expecting a lot. We know that tomorrow there will be a debate among the 27 in terms of what to do with energy. So I would say, if anything, it's tomorrow that really matters when it comes to the European angle.
Maria, wonderful reporting as always. Maria Tadeo there out of Brussels, Tom. So the NATO summit behind us, in front of us, a news conference, I believe, with Jens Stoltenberg, the Secretary General. Then it's on to the G7, then on to an EU leaders meeting, and the President, a busy man through the next day or so.
I wonder, John, how Mr. Putin observes this through the prism, the narrow prism of Moscow. How does he observe these next 3 days of diplomacy?
His reaction, one to watch as well, Tom. Maybe even the big one to watch. Futures up 20, up 0.4%. It yields higher by 8 basis points. Your 10-year, 236.81. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The US and NATO are preparing for the possibility that Russia uses biological, chemical, or nuclear weapons in its war with Ukraine. That's according to a senior Biden administration official. The US and other members of the Group of Seven plan to warn Vladimir Putin not to use those weapons. The UK is out with its own set of 65 new sanctions on Russia. According to Foreign Secretary Liz Truss, they target strategic industries, banks, and business elites. Also on the list, the world's largest diamond producer. Truss said those sanctions are, quote, complicit in the murder of innocent civilians, and it is right that they pay the price. Meanwhile, the US and European Union are close to a deal to slash Europe's dependency on Russian energy. An agreement may be announced as soon as Friday. President Biden's National Security Advisor Jake Sullivan says there will be a surge of US supplies of liquefied natural gas to Europe. Kim Jong-un has finally abandoned a testing freeze on intercontinental ballistic missiles. North Korea launched its first ICBM in more than 4 years. It went higher and farther than its last test back in 2017. South Korea says the test violated UN resolutions and Kim's promise to hold off on such launches. And Uber reportedly has reached an agreement to list all New York City taxis on its app. That's according to the Wall Street Journal. The move could ease the ride-hailing's giant's driver shortage and swing more business to taxi drivers. Their businesses have been hammered by the pandemic. Global news 24 hours a day on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Tuesday, Bloomberg Technology is live from the Shop Talk Conference in Las Vegas. Emily Chang sits down with Uber CEO Dara Khosrowshahi, DoorDash President Christopher Payne, and Savage X Fenty President Christiane Pendarvis, bringing you insight and analysis on the future of retail.
Are there customers that you think you've permanently won over?
Bloomberg Technology live, Tuesday at 5 p.m. in New York, 2 p.m. in San Francisco on Bloomberg Television.
We always knew from the beginning that the power of sanctions and export controls takes time. Yes, we're thinking of what's the next piece of escalation, but I think we just have to stay strong and vigilant in a tight coalition and focused on enforcement, because he's already feeling pain, and every week that will intensify.
That was Gina Raimondo there, the US Secretary of Commerce from New York City this morning. Good morning. Futures up 0.4% on the S&P. On the Nasdaq 100, we're higher by 0.5%. Yields are higher too by 7 or 8 basis points, approaching 240, 236.99. In the commodity market, crude 114.60. We're negative there about 1/3%, just short of 115. So we're wrapping up this NATO summit, Tom. I did have in the diary 8:15 Eastern time for a news conference with the Secretary General Jens Stoltenberg. I understand that's going to happen now at 8:40 Eastern time. So that's the latest time, and these things can move around. So that's about 20 minutes from now.
No surprise there. And I'd also point out, as I've mentioned this morning here, folks, the commodity lift up. It has been an extraordinary, I can even give you the lift off point since March 16th, up on commodities, now through to record highs. Right now, with a very important note this morning at her Chatham House, Leslie Vinjamuri joins us. Dr. Vinjamuri is Director of U.S. and America's Program for the London Shop. Leslie, you've got that A word in your report. I've been talking all morning about the linkage of war to diplomacy. Tell me how diplomacy and war can be linked through attrition.
Well, the attrition, I think, is the really concerning part here. We've clearly moved into a war that Russia has fallen far short of its own expectations, of the world's expectations, and is resorting to brutality, war crimes, as they've been called, and likely are, certainly look like they are. And that means a war of attrition. The diplomacy carries on, and alongside those very coercive measures, the sanctions. And as you look at Biden's trip to Europe, he's really focused very much on ensuring that Western unity. You know, the diplomacy is not only with Russia on the question of Ukraine, but it's amongst the European partners. It's very much, I think, one of the key points right now for Biden, and Jake Sullivan noted this, is ensuring that Europe stays on board, putting pressure on China. That's an absolutely critical factor in this diplomacy.
Is there a lesson of linking present attrition towards chemical weapons that we can learn from Syria and the Russian experience there?
I think the concern about the chemical weapons use in Syria is, of course, that the U.S. doesn't want to say that it will do something and not follow through. Obama's red line is very well known. We won't see a red line of that kind drawn, although the clear warnings that the chemical weapons use shouldn't be tolerated, that there is a ban that most countries around the world have signed up to. We know this. And there will be talks now. I think everybody's waiting to see what the U.S. and Europe will say. What will they do? Should Assad resort to the use? Should Putin resort to the use of chemical weapons?
Well, Leslie, we've talked about attrition. Let's also talk about the theory of deterrence. I'm taking it back to my foreign affairs classes at the University of Virginia. I mean, do we need to rethink deterrence if Vladimir Putin has proven time and again that he is not able to be deterred?
Well, I think that from NATO's perspective, from the U.S. perspective, the clear deterrent threat has been with respect to NATO as opposed to with respect to Ukraine. The red line is that there will be a very significant punishment inflicted should this war involve direct engagement with NATO. That is the strongest line. Some people argue that deterrence has failed with respect to Russia's invasion of Ukraine. I think that that is clear, but there are still significant measures being put in place. But ultimately, yes, it's been virtually impossible to stop Putin from just intense acts of brutality on the Ukrainian people, because it's clear that that has been absolutely critical to him. But, you know, from a clear deterrence perspective, that hasn't been NATO's #1 goal. We can debate whether it should have been.
Yeah. Well, and I would also love to debate whether warning of consequences means anything if you don't actually detail what those consequences would be, Leslie. But I also want to mention China, because we heard from the Chinese ambassador to the U.S. today talking about the friendship, the no limits friendship between Beijing and Moscow. He said, while it doesn't have limits, there is a bottom line. How are you thinking about China's role here?
Well, I think this is absolutely critical. I mean, there are many, many dimensions to this. The most obvious and direct one is whether China continues to assist Russia in subverting the tremendous sanctions package. The big question on the table is whether or not it will respond to Russia's request for military equipment. And this is what Biden is really working with Europe to shore up a very hard line of the sanctions that China would face were it to do that. But I think we also have a third question, which is sort of a first order question, which is about global order going forward. The UN Security Council is now facing a grave crisis where one of its permanent members has openly violated the most fundamental norm in the charter, where China isn't really calling that out, also holds a permanent seat on the Security Council, or any other number of global governance mechanisms that are critical to solving the big problems of climate, of the global economy, depend on China. And if China doesn't demonstrate some willingness to cooperate in bringing this conflict to a close rapidly, then I think it's going to make it just much more difficult to solve those much broader questions which are affecting people across the Middle East, across Africa, with oil prices, with energy more broadly, and of course with grains and commodities.
Leslie, thank you, as always, for your perspective. Leslie Vinjamuri there of Chatham House. Staying on top of a couple of stories this morning. Here's one. Severstal, the first Russian firm to run out of time to pay a coupon. And this, Tom, moments ago from Uralkali, the potash producer over in Russia. They're saying they transferred a loan payment to Crédit Agricole and the paying agent is refusing to process the loan payment. Now, Tom, this is part of the story at the moment, isn't it? It's just out there, and we can talk about it later, because the other thing I wanted to talk about is something I think might get your attention. The metals and mining sector is cut by Morgan Stanley on stagflation risk. This is why. They're tactically downgrading the industry group to inline from attractive to reflect the risk to the sector from a stagflationary shock. They think commodity prices remain elevated, but they see growing risk of demand destruction and a period of low global growth. That, Tom, is a major issue.
The Fed focuses on inflation, and yes, they do focus on economic growth, of course, but you've really got to wonder, John, the recalibration of economic growth. Again, I'm going to go back to, John, what you told me years ago, which is your year start is March 31, because everybody goes into foaming and venting for the end of the year, and maybe the year starts coming up here in a few days.
Q1, Tom. We get some surprises in Q1 often.
Yes.
And we've had another big one.
None like this year.
In 2022. Futures up 0.4 on the S&P from New York, with the Nasdaq up 0.5%. For our audience worldwide on TV and radio, this is Bloomberg.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor, y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modelizaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes, como tienen planteados el plan director urbanístico.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way. forecasting what kind of material we would need and what quantity we would need.
We are seconds away from some economic data in America. Good morning to you, with futures up 0.4% on the S&P, on the Nasdaq up 0.5%, and with yields higher by 8 basis points. Your 10-year 237.18, yields higher across the curve. With that economic data, let's get to Mike McKee. Morning, Mike.
Good morning, John. Well, the numbers that people are going to be interested in today are the durable goods orders, and they come in way down 2.2%. The expectation was for a drop of just 0.6. Ex-transportation down 0.6. The forecast there was it would be up by 6. Now, these numbers are always volatile, so the question is, does this really mean some sort of slowdown trend? Capital goods orders, non-defense ex-air, the one that we talk about that economists follow because it sort of goes into GDP, that is a proxy for business spending, down 0.3% after a 1% gain in the month of January, and that is much less than the 0.5% gain that was anticipated. Capital goods shipments, though, up 0.5%. So in the month of February, we were still growing in terms of capital goods. Jobless claims. Here's a number we have not seen in a very long time. 187,000. We are below the 200,000 mark for the month. Now, I'm going to guess that there is something a little odd about that. It's going to be, and Steve Stanley coming up will have a better view of that, but it's going to be something to do with seasonal adjustment or something, because that is such a huge fall, a decrease of 28,000. It's the lowest level since September 6th of 1969. Yes, so that is an amazing number.
And Mike, it's not population adjusted. So
no,
69 was 183.
Obviously, yeah, you adjust that for population.
It's a stunning number.
A stunning number. One other quick number I wanted to look at here just to see what happened, and this does not suggest a major change in the way things have been going. Durable goods orders for defense in the month of February were up 14%. They were up 18%, or they were down 34%. Excuse me. 14% up, down up 18% the month before. I was looking to see if there was any kind of a war, replace all those anti-tank missiles ahead of time ordering, but it doesn't look like it. We'll have to check that next month.
Mike McKee, thank you. Let's pick up on the price action. Futures up 0.4% on the S&P, on the Nasdaq up 0.4% also. This move in yields extends up 9 basis points, 237.91 on 10s. I'll go through the FX market just briefly. Euro dollar 109.79, down 0.25%, and in crude just south of 115, 114.68, negative 0.2%. If you take out jobless claims and just max the chart back all the way back to the 60s, you'll get to Kaylee's point, the lowest since the late 1960s. In 69, we had 183,000, 187 this morning. And Tom, I think it's fair to say the pandemic broke this chart, because if you look at where jobless claims were in the pandemic, sky high, we're back down to 187K, Tom. Just unreal.
Yeah, a chart that's on Vintage for me, I don't have time to bring it up right now, John, is a population-adjusted claims, and it's almost a social chart. It's interesting to see the changes in America, and indeed, what so many people talk about is a fully employed America. Stephen Stanley with us now, as Mike McKee mentions, with some wisdom. Stephen, I've got to rip up the script and go to the current account deficit, the current account balance, rather, a big deficit, which clearly indicates something back to 2006, 2007. What is the significance of our current account balance literally off a cliff?
Yeah, no, it's a function of very strong demand that we can't satisfy entirely at home, and so we're having to import a lot of stuff, both for consumers and for businesses, and that's been the case really since we got over the lockdowns. The trade deficit, the current account deficit, has been ballooning since then.
If demand is there, is the gloom crew just flat out wrong, and the economy is going to be resilient because the consumer is there?
Yeah, I think that the economy is going to be resilient, certainly for a time. I mean, you look at the household balance sheet. Households are sitting on a few $1 trillion in extra cash that they accumulated during the pandemic. Wealth is up huge. On the business side, corporate profits have made record highs, so businesses are pretty flush as well. People talk about the Fed tightening us into a recession, and there is a point at which that could happen, but we're certainly nowhere near that in terms of the level of rates where we are now or where we're likely to be over the balance of this year for sure.
Citi came out with a massive call this morning, Stephen. I'd love your response to it, your reaction. They said the median dot for appropriate policy rates at the end of 22 in the June SEP could, not a base case, it may, rise to around 3% from 175 to 2. How far do you think they're willing to push it this year? As high as 3?
Well, I mean, look, things could change. I mean, obviously the dynamic has changed quite a lot, and what the Fed is anticipating has changed with every quarterly new set of projections. But I would say if you listen carefully to what they're saying now, it seems like we've got a two-phase tightening cycle on our hands. Phase one is just getting back to neutral, and a lot of the folks that have spoken this week have suggested they'd like to get back to somewhere close to neutral by the end of this year, and then next year would be about taking policy into at least modestly restrictive territory. So I think most people on the Fed think that neutral is 2.25 to 2.5. And that's kind of where I'm right at the moment. That's where I'm pegging us to get to by the end of the year.
Can I go through a scenario with you, a potential one, and try and understand whether you understand the reaction function of this Fed? If they came across Q4 2018 and the market decided to tell them where neutral is, go away, and we had that kind of big move in credit again, and inflation wasn't coming down, Stephen, what would they do?
Well, that's an interesting question. I would say at this point, it sounds pretty clear that inflation is job one for the Fed, and they feel they have an urgent need to get inflation under control. I think they feel that time is ticking, and the longer we go with high inflation, the more likely it is to get embedded in the expectations, the longer term expectations of consumers and businesses. So I think that's the urgent task right now is to get inflation down. And they certainly don't want to cause a recession, but I think if it's necessary to slow the economy to get inflation down, it seems like they would be willing to do so at this point.
And what role does the balance sheet play in that effort, Stephen? We heard from Jim Bullard, who also wants 3% by the end of the year, thinks the neutral rate, though, is actually around 2%. But he was saying it's going to be passive runoff. Can the Fed stick with passivity here?
I think the Fed believes that the balance sheet is something that kind of runs in the background. I mean, you look at it now, and clearly there's the balance sheet is very large, and there's a tremendous amount of excess liquidity in the system. But it just kind of sloshes around. We get, $1.8 trillion in the getting put back to the Fed in the overnight reverse RP program most days lately. And so, they could take out 1.8 trillion and maybe do very little in terms of economic impact because they're just draining the money that's getting put back to them anyway. I think their view is that as long as they're shrinking the balance sheet over time, that they can manage whatever fallout comes from that with the various tools and rates that they have on the money market front.
In terms of managing fallout, though, the narrative is that monetary policy is always going to operate with a lag. That will be true in terms of reining in inflation. But on the growth side, by the time you actually potentially could start seeing an impact on growth, is it going to be too late and policy too far gone?
Well, that's always the classic thing is the Fed goes too far and waits too long. I mean, we've certainly seen it on the easy side over the last year where the Fed was just too slow to get going. And another classic mistake that the Fed has made at times is going too far and kind of overstaying the tight welcome. Again, though, I mean, if neutral is truly in that 2.25 to 2.5 range, we've got a pretty far way to go to get to even just to get there. And then, modestly restrictive policy, in my view, 25, 50, even 75 basis points above neutral is not likely to derail the economy overnight. So, yes, in theory, there is a level of rates that would kind of slam the brakes on the economy, but I think it's very far from where we are today and likely above where markets are expecting the Fed to go at the moment.
Stephen Stanley there of Amherst Pierpont. Stephen, thank you. Tom, as you know, this is a guessing game. an educated guess, but it's not a science.
Oh,
it's not a science at all. Do you remember when Chairman Powell at the end of 2018, do you remember when he spoke, Tom? I remember that exchange he had, some Q&A with someone. He turned around and he said, there's more to go. We're not buying neutral just yet. And the market turned around and said, we'll tell you where neutral is, and it's right here. Go away.
I've said this, John. I get some heat from people on this. None of this is in the textbooks. And John, with QE and all that, this is all original theory we're in, and now we're overlaying a war on it. John, I think you can give a unique perspective on this, because I know you're such a healthy guy that you've darkened the door for years of Holland and Barrett. They are a health store chain, I guess, in the United Kingdom, and they're having trouble making an interest payment.
The lead paragraph,
they were sold
Tom,
a number of years ago to an oligarch.
Yes. The lead paragraph in the FT reads as follows. Holland & Barrett is struggling to make a scheduled interest payment to its lenders, even though the UK healthcare retailer and its Russian oligarch-backed private equity owner are not under direct sanctions.
Fascinating.
Working some of this out, Tom, is really, really difficult. I go back to Severstal earlier this morning, just a prime example. They're saying they've got the money they want to pay, and yet it can't get through the banks. I don't know what's happening with Holland & Barrett, Tom. That's where you get your protein from. Your whey protein, your protein shakes, your vitamins, as you might say, as well. We would say vitamins, of course.
The big cans.
I didn't want to have this exchange right now. Can we get serious? In Brussels, Tom, any moment now, I think we're expecting to hear from the NATO Secretary General Jens Stoltenberg, that news conference, Tom. Still waiting for it to start. Still hasn't started. And as you know, Tom, these things move around. Of course they move around.
I would emphasize to those on radio and TV that today is literally out of the movies of another time and place. It'd be a great day to get perspective, John, from Madeleine Albright. Let us remember 3 of her 4 grandparents died in the Holocaust.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. The US and its NATO allies are preparing for what would be a dramatic escalation of the war in Ukraine, Russia using nuclear or chemical weapons. That's according to a senior Biden administration official. The US and other group of 7 nations are preparing to warn Vladimir Putin against using those weapons. The highly respected governor of Russia's central bank wanted to resign after Vladimir Putin ordered the invasion of Ukraine, but Bloomberg's learned the president ordered Elvira Nabiulina to stay. Nabiulina was nominated for a new 5-year term at the bank last week. And oil refiners in China are discreetly buying cheap Russian crude. The state-owned processors are negotiating privately under the radar with sellers. Most global buyers are shunning Russian oil after the invasion of Ukraine. They fear damage to their reputations or are afraid that they will violate sanctions. The Senate Judiciary Committee is expected to vote April the 4th on the nomination of Judge Ketanji Brown Jackson to the Supreme Court. On the second day of questioning, Jackson again defended her record on sentencing criminals and explained how she decides cases. Jackson's confirmation as the first black woman on the Supreme Court is all but assured because of the Democrats' control of the Senate. And the World Bank has priced the world's first wildlife bond. It's raising $150 million that will be partly used for the conservation of black rhinos in South Africa. The 5-year bond will pay returns determined by the rate of growth of populations of the animals. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
I'm here at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. That Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Good morning, everyone. Keeling Lines in for Lisa Abramos. Mr. Farrow off to start strong in the 9 o'clock hour. On radio and television now, we're waiting for comments from Mr. Stoltenberg in Brussels. These will be hugely anticipated, particularly with the war news we've seen out of Ukraine today. But first, an important interview on something that is receding into the history books, and that is COVID. Stefan Bancel with Eli Lilly in Belgium, and then on to his extraordinary performance on mRNA at Moderna, is one of the heroes of the moment, and the chief executive officer joins us this morning. Stefan, are you worried about a new variant of Omicron?
So first of all, thank you for having me, and thank you for the kind words. I'm not losing sleep on it. As I've said before, I think there's an 80% chance that the variants that we're going to see in the future are manageable from a severity standpoint and vaccine protection. But I think we should always be very cautious because there's a 20% chance that something happens in terms of the new variant that is very virulent. Like if you remember, Delta came after Alpha, but it was more virulent, Delta than Alpha. So we have to be cautious, and we're staying ready as a company to be able to update the vaccine as fast as we can if needed.
In America, we have such a low usage of the booster. Now, we're talking with you about the success of under 6 years old treatment and such. Tell us what we need to do to get a worldwide booster program going. What is the next step in a COVID that in our minds, maskless, is receding?
Yeah, I think people have to be careful, especially based on their risk. You know, I have daughters that are 18 and 19, they've got vaccinated. Do they need to get boosted every year? Maybe not. We don't know yet. We need to look at the data. But my parents that are in their 70s and 80s need to be protected most probably once a year with a booster like we do with flu. Because the issue as you get older, our immune system is not as strong like people that have, cancer or other disease.
Yeah.
And those are the people we need to be very careful about.
Well, Mr. Boncel, you didn't just apply, though, for a fourth booster shot for older people. You applied for all adults. What was the thinking behind that?
Yeah, it's to give a flexibility to the regulator to adapt to their needs. Let's not forget that there are people, unfortunately, that are 25-year-old that have cancer or 35-year-old that have organ transplant. And so we applied 18 and above so that in our dialogue with the FDA and regulators around the world, we can give them all the tools and all the data so we can make the right decision country by country.
All right, and while we're having a conversation about booster shots, potentially fourth shots for adults, we also have to talk about the under 6-year-olds, which Tom Keene mentioned. You released the data yesterday on the efficacy of looking for FDA clearance. On what timeline do you expect that?
So I think potentially this authorization of 6 months to 6 years could happen faster in the UK, Europe, Canada, and other countries. For the FDA, it might take a bit of time. As you might know, the vaccine is not currently approved for teenagers in the US, and so we're going to have to work with them to get all that age cohort. But we are in constant dialogue with the FDA, and so we're going to do our best with them to get this as fast as we can to parents. But also we have to, of course, to be very careful with safety, which is a #1 priority when you talk about vaccines.
Stefan, what is so important here is the outrageous success of mRNA in the timeline that you and your good competitors at Pfizer were under. What does mRNA do next? What is the next step after the stunning success you've achieved?
So what we want to do is we want to have people not being sick, hospitalized, or dying from respiratory virus. There are around 10 respiratory viruses that lead to disease and hospitalization. And today there's only vaccine against flu. As you know, most of them don't work very well. We announced today very good data on our first generation of flu shot, which we want to combine into a single shot, COVID booster, flu booster in only one shot. We also have RSV, which is another respiratory virus that is in phase 3 right now. We're also announcing this week that we'll combine COVID and flu and RSV booster. So that will make it very easy for people. The idea will be you get a shot a year and you are well protected.
And what are the odds that an mRNA flu shot will be superior?
So I think over time it's pretty high. What we're going to do with the current product, and we're showing today that we have the possibility for the most important strain of flu, which is influenza A, leading for 95% of hospitalization. Our level of antibody is higher. We'll have to demonstrate it in a large study in phase 3, but it smells pretty good. And that's our first generation of flu. We're then going to add more components to get the efficacy way higher. So give us a couple iteration of product, and I'm talking a couple years, not 10 or 20 years, and I believe we're going to get a very high efficacy flu shot on the market.
Stefan, thank you so much for joining us today. Mr. Boncel, of course, with Moderna and the great success of their mRNA vaccine effort. Kaylee, the news flow is extraordinary. I think we've got to push forward here to the comments of a gentleman from NATO. He's going to go back, I guess, and be the head of the Norwegian Central Bank. But Mr. Stoltenberg is front and center with the president in redefining what allies means.
Yeah, and of course that NATO summit has now wrapped up ahead of the G7 and European Council summits later today. But we understand from NATO, they talked about the risk of potential weapons of mass destruction being used on the part of Russia, be that chemical, biological, also increasingly preparing for the risk of Russian nuclear incidents and warning, Tom, of severe consequences should Russia cross any of those lines. What we need more detail on is what exactly those consequences will be.
And buried in the news flow, folks, and this happening, I'm going to say 18 hours ago, is a real new deployment of new effort and material to the eastern front of NATO. We don't have the geography on that specifically, but there it is. In the markets, Kaylee, what are you looking at?
I'm looking at the bond market continually, Tom, as has been the story for days now.
You took the Pharaoh Kool-Aid, I see.
Can't help it. I've been on the show for a couple days because someone decided to take a trip to Paris.
Yes, we did.
Yeah. So here I am adopting Farah's thinking on the bond market. But really, Tom, up 7.5 basis points on the 10-year yield, and that's not just a Treasury story. It's true around the world today.
The commodity market is what I'm looking at, folks, and you need to understand with Brent crude on a tear down near 100 and up, I mean, up 20%, and it's not even headlines. Brent crude, $122 a barrel. Please stay with us through this historic morning with diplomacy in Europe. Of course, much going on in Washington. The senator from Ohio in sharp conversation at 12 noon, and we await comments from Mr. Stoltenberg. This is Bloomberg. Good morning.
Welcome back to a special Miami Open update for Bloomberg TV and radio from Tennis Channel. I'm Erin Coscarelli. The ATP and WTA tours move on to Florida for one of the most prestigious Masters 1000 tournaments of the year. Former world number one Naomi Osaka got off to a winning start at the Hard Rock Stadium as she took out Aussie Astra Sharma in straight sets. She'll now face fellow major champ Angelique Kerber for a spot in round 3.
Like the last match that I played was not the greatest memory for me, so I don't know. I just wanted to,
Later, Sloane Stephens also moving on. The 2018 U.S. Open winner taking care of business against Hannah Udvardy. Up next for her, fellow American Jessica Pegula. And don't forget, Tennis Channel's live coverage continues at 11 a.m. Eastern. I'm Erin Coscarelli.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
doesn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Live from New York City this morning. Good morning, good morning. Equity futures shaping up as follows. Positive, 0.5% on the S&P. The focus of the world is in Brussels. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
From New York City, we begin with the big issue. NATO members touch down in Brussels.
Good morning. We meet here at the NATO headquarters, facing the most serious security crisis in a generation. And we will address this crisis together.
That delivery coming from Jens Stoltenberg as President Zelensky pleads for more help.
Come to your squares, your streets, make yourselves visible and heard. Say that people matter, freedom matters, peace matters, Ukraine matters. From March 24th, in downtowns of your cities, all as one together who want to stop the war.
Going into a G7 meeting, leaders preparing to deliver a warning to Putin. Bloomberg reporting the US is working with NATO allies to prepare for the possibility Russia deploys biological, chemical or nuclear weapons as part of its invasion of Ukraine. Team coverage starts right now with Anne-Marie at NATO headquarters, Maria Tadeo at the EU Council. First to you, AMH, that meeting just wrapping up.
Yeah, that meeting just wrapping up, Jonathan, and then the president, of course, will then meet with his G7 counterparts. What we know from this meeting of NATO allies is that they are planning and preparing for the possible use from Russia, from President Putin, to use chemical or biological weapons. Yesterday, Jens Stoltenberg, the NATO Secretary General, said this would have dire consequences on people of NATO. And we already know in that G7 draft statement that they are going to warn President Putin on the use of those if he were to use chemical or biological weapons and what that would mean in terms of severe consequences. Jonathan would also look out for the rest of the day. We should just note we are still waiting for the U.S. sanctions that Jake Sullivan said yesterday on Air Force One that we would get. And then obviously there's lots of talk from the United States to try to alleviate Europe's use and dependence on Russian fossil fuels.
So, Maria, we go from NATO, where Anne-Marie is, to a G7 and an EU Council. What are we expecting from those two meetings?
Well, what we know is that once again, we're going to hear from the Ukrainian president, and this will now go from a military conversation to a political one, because remember, Jonathan, the talks between the Ukrainian delegation and the Russian delegation continue, and the idea here is that Ukraine will once again insist that they want to see a ceasefire, but also international security guarantees, and this is where it gets interesting for the European Union. The Ukrainians have said that, okay, NATO is very clear at this point, it's not going to happen. This country has had a major reality check on NATO. Some would argue it's been brutal, it's been cruel. This wake-up call that NATO is not going to come to the rescue of Ukraine. This is a war they have to fight for themselves. But the Ukrainians argue, provided that we don't join NATO, we want to get international security guarantees that would be signed and co-signed by countries like the United States, the European Union, and potentially include a membership to the EU. So the Ukrainians are making it clear they want to turn the focus to the politics of this and have a real conversation as to whether or not Ukraine has a place in the European Union to become the 28th member. But this is really a hot potato for European leaders. Some that believe we have to give Ukraine some hope. This has been a brutal war that continues. And others, I will tell you, we have to be real. Right now, this is a country at war. They're not in a position to join. But also, we have a lot of other issues to focus on, in particular, energy. And that warning from Vladimir Putin that he's only going to accept payments in rubles, that is also going to be a major part of the discussion now. Do we pay rubles? Do we not? And I hear from a European official telling me we have no appetite to renegotiate these contracts. So it's up to Russia to decide whether or not they want to cut the flows if they only take ruble payments.
Anne-Marie, can I come to you on that? Fatty B-roll speaking right now. The headline just dropped. Russia's move to rubles for gas would be a security threat. I want to come to you on that, AMH. What can this administration do with its allies in Europe to help them pull back on their dependence of Russian gas anytime soon?
Jonathan, you hit the nail on the head saying anytime soon. It's just not possible. Look at Germany. More than 50% of their natural gas comes from Russia. This is how they light their homes, they heat their homes, and just to turn off the taps overnight is just not possible. The infrastructure's not there. But what we should say is that the administration, and Bloomberg was one of the first to report this, working alongside EU officials, they've been going to producers around the world, notably Qatar as one of them, and those consumers of big giants like Qatar, like ships that go to Japan with LNG, and seeing if there's a way you can divert some tankers to Europe. Kind of a Band-Aid. Also, Jonathan, there's a lot of LNG in the United States that goes to Europe. Potentially, you could see some of that production be ramped up and sent to Europe. But we should note that this is going to be incredibly difficult. But the direction of movement right now is that at some point they will loosen that grip on Russian energy. We already heard from Robert Habeck over the weekend. This was kind of stunning. He went to Qatar. That would be a lot more expensive to get LNG from Qatar than through that Nord Stream 1 to Germany. And Jonathan, he said, in the months to come, we still may need Russian gas. In years to come, maybe not so. And he who has ears should listen. That was a veiled threat to President Vladimir Putin.
Well, let's talk about what we heard from the finance minister this morning from Germany too. Maria, an effort from Germany to cut the fuel tax for consumers and also to offer a subsidy, some support as well. That's from the Germans. And we just sat there on Bloomberg Surveillance this morning, Maria, thinking about who's next, who follows. Does the whole of Europe have to do the same thing?
Yeah, and we're going to hear it, of course, from the French. Remember, they've already done this, and in particular, Emmanuel Macron is up for re-election in 4 weeks' time. We've also heard it from the Spanish, too. We're going to have to take more measures to make sure that the cost of these energy doesn't get passed on to consumers in a way that could be detrimental or create social tension. The same when you look at Italy under Mario Draghi. Now, going back to what Anne-Marie said, today and probably tomorrow, we are going to get something on paper that signals the United States is going to help Europe to diversify its providers. And we also know there's European legislation that's going to kick in on this. The European Commission aims to cut down imports from Russia by 80% in the next 2 years. But what is so crucial to understand here, Jonathan, and it really kind of shows you the difficulty for a lot of Europeans in this, is that right now there isn't a European energy market. There simply isn't one. What you have is 27 different systems that work together at times, but other times they compete. Some want to use gas. Others will tell you what I'm interested in is the price of electricity. And that is the issue. For the Europeans, it's not about 2 or 3 years down the line. It really is about preparing for this winter that is coming up.
Maria, thank you. Maria Tadeo and Marie Hordern, both of them sticking with us through the hour. The back and forth is going to continue as the headlines pour in. So we go from a NATO summit looking for a news conference with the NATO Secretary General Jens Stoltenberg. That was meant to take place in the previous hour. As you'd expect, with an event like this, things move around. When that starts, I'll bring you some of the headlines. Then onto a G7 meeting. Then from there, onto a meeting with EU leaders. A lot to get through. The panel conversation starts now with PGIM's Robert Tipp, Flo Banks, Esty Dweck, and Zach Griffiths of Wells Fargo. Esty, first to you. I've asked this a few times recently, and I think people are on the same page. This is the question for Europe. Can they avoid a recession?
That is exactly the big question. At the moment, I think I want to say, yes, they can avoid a recession, but the picture is certainly looking precarious at the moment. We know inflation is going to be a lot higher. We know costs are getting passed on to consumers. You have your heating bills, your petrol bills, also now food bills that are going to start to go up. Growth decelerating. One thing that might have another impact is whether or not we see another COVID wave. We're seeing infections go up again. We don't talk about it so much anymore. So the momentum was relatively good coming into this year, which is supportive, but plenty of question marks because it's a long year ahead and there are a lot of obstacles right now.
Robert, listen to this revision from the UK yesterday for GDP this year, down from 6 to 3.8%. Now, even if we don't get a recession relative to what we thought we were getting, it might feel like one, won't it?
Right. Well, I think that's one of the few saving graces of this situation is that the world has come into the Russia-Ukraine situation with tremendous forward momentum around the world in so many places, except for China, tremendous economic momentum to the extent that, as you just went through, you have a huge bite taken out of the growth picture, and yet still an above trend, very solid backdrop. And I think that's likely to be the case in many places unless it gets much worse. And obviously that prospect is there for either an energy cutoff or an embargo. As impossible as it may seem to get through, you never know when you may have to. So far, that is one of the saving graces, the momentum there, and policymakers are certainly leaning into that, taking advantage of that strength, planning to tighten financial conditions, even in the face of these tremendous headwinds.
Zach, your take.
I agree with what's been said so far. And when we think about economic growth in the UK this year, we look for about 3.5% on an annual basis. So yeah, we have a lot of momentum coming into this crisis, and it's going to be a huge issue, especially across the pond. That's something that we're keeping an eye on. We're not calling for recession in the Eurozone right now, but we'll certainly be monitoring the developments in Russia and Ukraine going forward, and that's going to really inform what's going to happen in the Eurozone, UK economies. But for us, what we're focused on is the relative central bank response. And it's been interesting to see the ECB remain a little bit more hawkish than we thought, and the Bank of England shift a bit more dovish in its last meeting. So that's kind of the lens that we're looking through the Russia-Ukraine situation at right now.
This is a headline that's just crossed. Jens Stoltenberg did have a job lined up at a central bank. NATO extending Jens Stoltenberg's term as chief for one more year. That man, a very busy man. Certainly you don't want to change your leadership with a situation like this. Just getting confirmation of that. NATO extending Jens Stoltenberg's term as chief for one more year. That term was up. Much more on that. Looking for a news conference to start with him any moment now down in Brussels. Robert Tipp, Esty Dweck, Zach Griffiths sticking with us. Coming up on this programme, world leaders coming together in Brussels condemning one man.
This illegal, brutal invasion of a friendly democracy in Ukraine by Vladimir Putin is absolutely unacceptable.
The conversation continues next.
Variant and the latest wave have an impact on not only consumer trends but your business, and do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida, and I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Vladimir Putin has already crossed the red line into barbarism, and I think it's now up to NATO to consider together the appalling crisis in Ukraine, the appalling suffering of the people of Ukraine.
Global leaders weighing in on the situation in Ukraine as Russia continues its invasion. That was Boris Johnson of the UK making comments in Brussels just moments ago. A headline crossing moments ago as well. NATO extending Jens Stoltenberg's term as chief for one more year. I mentioned that he had a central bank job lined up. Norway came out at the same time and said this. The government saying that Jens Stoltenberg has resigned as the central bank governor, I guess before he even started. So comments from John Kirby as well, speaking to Fox News, a US broadcaster, saying the following. The US has clear evidence, quote, clear evidence that Russia is committing war crimes. Just part of the conversation in Brussels at the moment. I'll stay on top of that for you. For the central banks, it's pretty clear. Fed officials are ready to go, including even people like Mary Daly. Some people believe she is a dove. She sounded like anything but. Take a listen.
I will absolutely confirm what Chair Powell's confirmed for himself, which is that I have everything on the table right now. If we need to do 50, 50 is what we'll do. If we need to do 25 in balance sheet, that's what we'll do. But the data will help us determine how much is necessary.
Mike McKee, the San Francisco Fed president there, they are all lined up, aren't they?
Yes, and now the Minneapolis Fed president, Neil Kashkari, out just a few moments ago. He is perhaps the most dovish member of the Open Market Committee. He's not a voter this year, but saying that they have to do something about inflation, and he's penciled in 7 rate increases for this year. So he is sounding hawkish as well. And here's the problem. You take a look at where the Fed is and where the Fed thinks it'll be. That's PCE inflation. The last blue line is where we are right now, and that white line is where the Fed thinks we will be a year from now. It doesn't seem likely, does it? And you can see the yellow line, that's where the market thinks we'll be a year from now. And the Fed is worried that that's going to de-anchor inflation expectations, which is why you get comments like these. You heard from Mary Daly, but also from Loretta Mester yesterday. We need to be more aggressive earlier. And Jim Bullard, we have to be bigger. And of course, Mary Daly saying we have to do whatever it takes. The question is, can they do it? That's the next thing for the market to bet on, because the Fed doesn't have a great track record. On Monday, Jay Powell said, well, there have been historical examples of coming in for a soft landing, but I want you to look at the 2 boxes on the left side there, John. What was happening when the Fed was raising rates? Inflation was going down. So, of course, they had a soft landing. Inflation wasn't going up. Now you look at the right-hand side, and you can see a big difference. Inflation way ahead of the Fed. How high are they going to have to go to try to bring that down? And does that mean we can get a soft landing?
Mike McKee, thank you. A lot's changed in a week for this Federal Reserve, from the news conference last week to this chorus of individuals on the Fed calling for perhaps 50 basis points in May. A headline just crossed the Bloomberg. This sanctions list in America is getting longer and longer. With the breaking news, let's head back to Brussels and catch up with AMH. Hey, Anne-Marie.
Hey, Jonathan. Yeah, we're just getting this very well highlighted yesterday from Jake Sullivan, the sanctions on a number of Russian tycoons, oligarchs, elites, and lawmakers. Let's just quickly run through them. 328 Duma members. This is the parliament, as you would say, in Russia. They are getting on the sanction list, as well as Duma as an entity of itself. So basically, the entire Russian parliament is now sanctioned by the U.S. government. Herman Gref, Jonathan, a name that's very well known to Bloomberg viewers and listeners. He's, of course, the head of Sberbank. This is Russia's largest bank. If you are a Russian individual, likely you or someone in your family has an account at Sberbank. He's also been a key ally and advisor of President Putin since the 1990s, before he became into power at the Kremlin. We should also note 17 board members of Sovcom Bank and 48 large Russian defense state-owned enterprises, Jonathan. So this is just another ratcheting it up of the penalties at the Kremlin, and it follows, Jonathan, the heels of what we saw to the United Kingdom. They as well went after Herman Gref, the head of the biggest Russian bank, Sberbank, this afternoon.
This makes things very complicated if you're a debt holder of certain companies who are majority owned by one of these individuals. Anne-Marie, thank you. AMH over in Brussels. We'll stick with Anne-Marie through the morning, no doubt. Robert Tipp back with us, SD Dweck, Zach Griffiths. Robert, I want to keep you out of trouble on single names, so I'm going to do the single name story, and you're going to talk to me sort of hypothetically, theoretically, on what you think should happen here. Severstar became the first Russian firm to run out of time to pay a coupon, had a 5-day grace period, exceeded that. They have said they're trying to send the money, but the bank won't pay that money on. It won't clear the pipes, so to speak, to make this really simple and reach the end investor. Now, Robert, I want to understand from your perspective whether you would see that as a credit event. If the company has the money, wants to send the money to the end investor, but the money can't reach the end investor because of sanctions or paperwork, whatever it is. What is that?
Right. I think that, this is a highly refined area, and the legal experts are poring over this, and precedent is being set, as we speak. And so this is a very unusual situation. I think there is a standard that, say, for a sovereign or a strong a priori going into this, that for the sovereign itself, that if you have managed to get yourself sanctioned, and as a result, you're dropping money into some place, you're trying to pay, but nobody will touch that money in order to forward it on, that is an event of default. But in some of these other situations where the money is out there and it's not their doing that they are sanctioned, that may be something that hangs out there and is yet to be determined.
The reason I ask these questions, Zach, I'm just trying to work out whether we fully realise the risks associated with this story yet. You've got foreign investors that can't sell, exit the Russian equity market. I mean, if you bring up the Russian equity market today, 4-hour trading session, there were, 30-plus stocks trading. You can't short sell. You can't sell if you're a foreign investor. The wealth fund is willing to prop those equity markets up, those equities up. Zach, have we fully realised the damage here, the ripple effect from all of these stories that are just building up day after day, week after week?
I don't think so, Jonathan, and I think we're really in for a long slog here. It doesn't seem like this situation is getting resolved quickly, so you're going to have more stories like this build up. It's going to play a role in the global financial markets. I think the biggest thing that we've seen recently and expect to see going forward is continued volatility. When you have really high inflation on top of this geopolitical backdrop, as well as very hawkish central banks almost across the globe, that's a very potent recipe for volatility. So we think that's what you're going to continue to see going forward. And the situation in Russia and Ukraine is going to continue to unfold and probably produce more volatility-inducing events in different parts of the financial markets.
Esty, does this make it difficult, uncomfortable, highly uncomfortable to be long European banks?
It certainly doesn't help the case. There's still questions about how the European Central Bank is going to react. We know a lot of these TLTROs are coming to expiry in June, and then the banks could get a second hit. So we don't know if the ECB is going to try to extend these or launch a new one and keep that little yield advantage for financials, but it's certainly the sanctions question is going to last a long time. I agree this situation is not going to be resolved anytime soon. Even if we get resolution to the conflict, I don't think all of the sanctions are going to be removed, at least not initially. So the European banking sector is facing that problem, and then it's going to face that European growth question that we talked about at the beginning of the show. So a lot of different hurdles here for European financials. They've dipped a lot, but it's difficult to try to call a bottom here.
Robert, we've got time. I just have 40 seconds here, and if you need more time, I'll come back to you on this question. It's an important one. Do you think we've fully clarified the reaction function of big central banks like the ECB?
No. This is a test for them because there's a lot of uncertainty. I think that the first indication from the ECB, though, is that they've been given the mantle, as has the Fed, to fight inflation and to put growth at risk. And that's a dramatic change that we've seen over the last few months. It really came to the fore, began to with the Powell nomination, when he was renominated and Biden really put inflation as the priority because the politicians want out. They do not want to own this. And I think we saw that in Lagarde's most recent press conference, that the ECB now owns this and they're willing to take some risk with growth in order to make sure they contain inflation expectations.
Robert Tipp, let's continue on that point with Zach and Esty as well, going into the opening bell. Coming up, your morning calls, and later, can the big banks bounce back as the sell-off in treasuries returns? That conversation just around the corner. From New York, this is Bloomberg.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. It holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Happening right now in Brussels, Jens Stoltenberg, the NATO Secretary General, speaking with reporters. When we get some relevant headlines, I'll bring them to you. Let's get the morning calls. Deutsche Bank upgrading Johnson Controls to a buy, $79 price target, seeing an attractive valuation following the stock's recent declines. Morgan Stanley tactically downgrading the mining sector to inline, cutting his view to reflect the growing risk of stagflationary shock. I'm going to come back to that in a moment. And Citi naming M&T Bank a top pick in regional banking, seeing further upside amid rising interest rates. They're three of the calls. Up next, can the big banks bounce back? This is Bloomberg.
At the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
25 seconds out from the opening bound this Thursday morning. Good morning to you. Equities with a little bit of a bounce on the S&P, up 0.5% on the Nasdaq, up 0.5% also. This equity market doing okay in the face of a Treasury market sell-off that resumes. Yields higher, much higher. That's the opening bound in New York. Switch on the board and get to the bond market. Treasuries ended last month in the low 180s. Now with a move higher to 236.63 and up another 7 or 8 basis points this morning. Euro dollar 109.81, down 0.2%. Crude down about 0.6%. And as for this relationship with China, this headline just crossing the Bloomberg: the United States saying speculation of a deal on China's stock listings is premature. That headline just crossing. Happening right now over in Europe, in Brussels, Jens Stoltenberg continues a news conference speaking to reporters. He says the following: the NATO Secretary General says the use of chemical weapons will have wide consequences. We need to be working out what those consequences actually are. We've just wrapped up a NATO summit. This is the direction of travel from here. Leaders leaving that, they will go on to the G7 meeting. We have a G7 meeting. Then from there, we have an EU Council meeting as well. So the president busy today, busy tomorrow as well, meeting with his Polish counterpart. So that's the story of the moment. About, what are we, a minute into the session? We're up 0.4% on the S&P. Breaking down the stock action, here's Taylor Riggs.
John, take a look at shares of Uber, from foe to friend. Uber now coming out and saying that they will start to list some of the New York City taxis on their app. It's sort of a good for both companies, right? If you think about some of the driver shortage that Uber's had to deal with, and then of course it sort of helps the city's taxis who've been hurt by ride sharing and of course the pandemic. So those shares are up about 4.5% on that partnership. Take a look at Nikola. Now analysts went to that investor day, and JP Morgan is one of those who came away with that with a really positive impression, saying that he visited the manufacturing site, was able to test drive a few trucks. Those shares are up almost 17%. Spotify's another one where analysts are also actually pretty positive on the street. Spotify came to an agreement with Google that allows Spotify to bill users directly. The sign-up process will be more straightforward and sort of simplify that Android process. So analysts there are pretty positive. And finally, the last one that I was showing here, KB Homes, sort of the deliveries are coming in a little bit soft given some bigger than expected supply chain issues. So John, no signs there really of easing.
The Uber story, Taylor, is this about a lack of access to cars? Have they done this not as a favor but because they need to?
Good point. You know, I think that Uber, as we know, was dealing with the driver shortage. And so I do think that this helps sort of relieve some of the pressure, maybe hoping that it'll reduce prices for some of the consumers. And then you think just big picture, sort of an adversary at first. And I do wonder the implications of bringing them back on board and sort of becoming a friend to the industry, how you think about that partnership going forward, getting those guys on your side.
Taylor, thank you. Taylor Riggs there with the latest, some of the stock moves this morning. Good to have Taylor Riggs with us around the opening bell. I mentioned a few times what's happening in Brussels, the meeting that's behind us, NATO, then onto a G7, onto a European Council meeting as well. About 15 minutes ago, we heard from the US announcing a new package of sanctions on Russian elites, lawmakers, and defense companies too. President Biden just moments ago saying Russian elites and lawmakers should share in the pain. The picture's on the screen right now. Jens Stoltenberg, the NATO Secretary General, who gets a new one-year term, if we can call it that, an extension of 1 year. That was announced in the last 30 minutes too. He's speaking to reporters at the moment. As I've said repeatedly through the last 30 minutes, any relevant headlines, I'll bring them to you. One sector we're looking at in the equity market is the banks and the relationship between the yield curve and the financials and the performance of those stocks too. Here's Kaylee Lyons with more. Hey, Kaylee.
Hey, John. Well, you're seeing today yields going back up. Therefore, the bank stocks are going back up. When we saw a bid into treasuries yesterday, these stocks were down hard, down about 3%. And actually, they are still down on the year. The KBW Bank Index is off by about 2.4% since the start of 2022. Of course, weighing on the banks, you have the idea of inflation, of slowing growth. Put that together with the prospect of a tightening Federal Reserve, maybe that picture starts to change. But the thing is, when you look at the relationship between these banks and the bond market, as we know, we have seen a massive move in yields this year. Right around 236 or so, we're almost 90 basis points above on the 10-year Treasury where we began the year, more than 60 basis points above where we started March. And yet the move in financials has lagged that move in yields. Maybe that's because we don't need to look at the 10-year independently, John. We have to look at its relationship relative to other durations, taking a look at the shape of that yield curve. And that yield curve, by and large, while we may be getting some steepening today, the trajectory has been towards a flatter curve. 530 is hitting its narrowest spread between the two since 2007 yesterday. Even with a bit of steepening today, we're still sitting around 17 basis points. So when investors are looking at financials, what are they really looking at? Maybe it's just that yield curve, John.
Kelly, nice, great work. As always, we appreciate it. Thank you. Robert Tipp, first to you. Let's start with the yield curve. Then I want to turn to SD and get her thoughts on the financials. Rob, if we haven't fully clarified the reaction function of central banks to what is developing in front of our eyes right now, can we make a call this year on the yield curve just yet?
Yeah, I think so. I think that actually where I thought you were going to head on the yield curve is all the discussion about recession in 2s, 10s. But I think we're at the stage in the cycle where yields have risen a lot relative to the spot administered rate. So in other words, you know, the forward curve has priced in 200 plus basis points of rate hikes from where they've started off, and they've moved 25. So this is a point where you need a continuing stream of incredibly strong data to keep pushing the forwards higher. The outlook, though, the market has bit down on the idea that the central banks will succeed eventually. And so the beyond 5-year part of the curve is keeping the faith, and I think that's correct. And I think the track record on soft landings is not as bad as people think. And these central banks are, with their transparency and their processes, I think they have better odds than they have had in the past. So I think what you're going to see is that administered rate climb the forward curve, and the points beyond the 2-year remain relatively flat. I think the interesting thing, though, and Powell pointed to this the other day, is that that very steep first 2 years of the curve is what people should be looking at if they're looking at to get a read on whether the economy is strong or not. And the 2s, 10s is really not the place to look. It's a red herring. There's literature on that. I think in the past, it started off, people were looking at funds, 10s, and then that migrated to people looking at 2s, 10s, but the much higher quality signals in the front end, and the central banks, therefore, are likely to be climbing that curve, leaving that long end flat.
Can I come to you on this, SD? What's more important as an equity investor, the high-quality signal that Robert Tipp describes, the part of the yield curve that Chairman Powell thinks you should be looking at, or just the fact that there is something else that the rest of the market is looking at? What do you do?
There's so many conflicting signals. There's so many different interpretations of the curve when you look at the very short end, the middle part, as you were saying now, and the very long end. It's a question of seeing if the market is thinking at some point that the Fed will achieve this soft landing, and I would agree that it has a better chance given the current growth momentum and the savings that U.S. consumers have compared to previous instances. When you look at the very long end, then it doesn't look like there's as much of a concern about growth. But then when you look at the Fed futures market, you're starting to see rate cuts coming in already maybe at the end of 2023. So a very mixed picture. When you're thinking about the financials, or equity markets in general, it's a little bit of that combination. At this point, I think it's more about the short end and how that's going to react. We've already seen a lot of a reaction. And then that signal between the 2s and 10s could be one further indicator that adds to these growth worries. But when you're looking at the U.S., I really don't see I see a very small recession risk for 2022. So if your investment horizon is throughout most of this year and we have so much priced in already, your equity picture is starting to look a lot better already.
Zach, 2s, 10s right now, 21 basis points. We were much lower earlier this week. Your thoughts on it?
Yeah, it's been an incredible flattening move, and we think the curve can continue flattening, but we would say that the 2s, 10s curve as a recession indicator is not as strong as it used to be, and that comes down to just how much central banks have bought in government bonds and pushed the back end of the curve lower. So one way the Fed could maintain some steepness, and we don't think this will steepen the curve outright, but could result in a steeper curve than it would be otherwise, is an aggressive balance sheet runoff policy, which we now expect to be announced in May. And the big difference this time between now and in 2017 to 2019, when the Fed was reducing the size of its balance sheet, is other major global central banks will be doing the same thing. You won't have the big counterbalance from the ECB and BOJ, who were buying a ton of bonds back in the 2017 to 2019 timeframe. So we do think that has a bigger impact, but we don't think it precludes the curve from flattening more from here.
9 minutes into the session here, your equity market up about 1/3 Top of the pile, materials and energy. Materials up by 0.7%. Energy, the winner of the year, the winner of today, the session, up by around about 0.5% on energy stocks. This from Morgan Stanley earlier this morning. I think this call is fascinating. They downgraded the mining sector. I wouldn't call them outright bearish, but this is what they had to say. Commodity prices remain elevated, yet downside risk of building on potential demand destruction. We are tactically downgrading the mining industry to inline, reflecting risk of a stagflationary shock. Esty, can I come to you on this? Your thoughts on this? That commodities might remain elevated, but the commodity producers may not perform as well because we start to think about so-called demand destruction.
It is one factor that we have to keep in mind, because if prices remain this high, you do have the question that inflation can become self-defeating in a sense, that consumers just postpone, don't want to spend that much, wait for things to improve. There at some point could be the question of how much the costs can continue to be passed on. We just came out of the lockdowns and had this big reopening and this real demand that came through. As that normalizes, I'd have to agree there is something of a risk. Stagflation obviously is something of a risk as well, not our current base case scenario. And I think it's probably a little too soon to start to look at that for the mining companies as well. But further out, I think it is a valid question.
Robert Tipp, what do you think? Final word.
Yeah, I think that a lot is priced into the markets. There's been a lot of anxiety. I think that the focus on Russia, Ukraine, given what we know about the situation, should probably be focused more on the central banks. I think that the worst, obviously the terrible humanitarian crisis is right there, but if that's not spilling over into a larger, wider conflict, the performance of the markets is going to come back to the central banks and the economies. And right now, I think the markets have priced in a lot from these central banks. Yields have risen a good deal, and yield is going to begin to kick in some of these, although it's hotly debated, it's going to depend on the economic outlook. Some of these higher yielding sectors, I believe, are going to begin to kick in terms of return.
Robert Tipp, Esty Dweck, and Zach Griffiths. Coming up, the president meeting with allies to discuss ways to pressure Russia out of Ukraine.
We always knew from the beginning that the power of sanctions and export controls takes time.
The President of the United States just wrapping things up at NATO HQ. From here, President Biden goes on to the G7 meeting, and a little bit later, an EU Council meeting as well. On to tomorrow, where he meets with his Polish counterpart. A busy day ahead in Brussels for the President of the United States.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done, uses a small sample number, and most of the time, when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
NATO leaders gathering in Brussels this morning. Good morning to you. The President of the United States going from here to a G7 meeting, then an EU leaders meeting a little bit later. Then tomorrow, the President of the United States meeting with his Polish counterpart. I'm pleased to say we can join Anne-Marie right now for a special guest.
Yes, that's right. As we see NATO leaders, the G7, as well as the European Union, really start to ramp up the pressure on President Putin. We are now joined by the Pentagon Press Secretary, John Kirby. Thank you so much for joining Bloomberg.
Happy to be here.
Let's begin with, we know what the G7 is going to state, a warning for President Putin on the use of chemical, biological, or nuclear weapons. And we hear allies say there will be, quote, severe consequences. What are those consequences?
Yeah, I think it's, we want to leave decision space for leaders, so I don't want to get ahead of decisions that they haven't made yet, and hopefully they won't have to make those decisions because Mr. Putin won't try to use weapons of mass destruction, biological or chemical weapons inside Ukraine. There's no reason for him to do that. Now, I will tell you, we haven't seen any indications that they're preparing to do that, but there are worrisome signs when they talk about it, when the Russians talk about it.
But they've even used these types of weapons in the United Kingdom.
That is what is so worrisome, is that when you hear the Russians talk about things, their playbook is, I'm going to accuse you of something I'm already thinking about doing, and that's what got our attention up. Again, we haven't seen indications that they're using them inside Ukraine or preparing to, but just the fact that they're talking about it. And this is, to your point, this is a country that has a history using biological and chemical weapons, either on an individual scale or on a mass scale.
And NATO's Jens Stoltenberg said there'll be dire consequences of those countries, though, near Ukraine. If there was a spillover effect of these types of weapons, would that trigger an Article 5?
I think that's a discussion that NATO would have to have. As you know, Article 5 is an armed attack against one, is an attack against all, and so you'd have to define an armed attack. And again, I don't want to get ahead of decision-making here or speculate about hypotheticals, but clearly one thing that is on display very, very dramatically here at NATO headquarters is how united the alliance is. It's more united, more determined, more resolved than certainly I've ever seen when I was in the Navy for 30 years. This is an alliance that is very aware of the real threat on its borders here with Russia and with Belarus and with Ukraine. And so I think you're going to see them continue to talk here today about how do we increase that posture, how do we reinforce it, and what's the long-term posture look like? Because
you keep those troops there that you're deploying now.
Exactly right. So obviously we want the war to end. No matter when it ends or how it ends, I think it's fair to say that the security environment in Europe is now changed and will stay changed, given what Mr. Putin has proven that he's willing to do right on NATO's doorstep.
So we're looking at long-term American troops based on the eastern flank.
Well, we don't know yet. I mean, but part of the discussion today is going to be, what does that posture need to look like? I'll tell you, before the war, there were 80,000 American troops in Europe on rotational or permanent orders. Now, there's more than 100,000. And we're not ruling out the possibility that we'll send more troops. Now, these are temporary deployments, but one of the things that we're going to be talking about in the Pentagon after this meeting, and I'm sure they're talking about it right now, is should the posture of NATO's eastern flank change in more permanent ways going forward based on what we've seen Mr. Putin do?
Now, since there is a lot of concern about the use of these weapons of mass destruction, just yesterday, though, Jake Sullivan said there was no need to change the U.S. posture. But you're saying that a lot of the times when the Russians talk about these actions, they sometimes use them. Is it irresponsible to not change the U.S. posture?
What Mr. Sullivan was talking about was our nuclear strategic deterrent posture, because, as you know, a couple of weeks ago, Mr. Putin said something to the effect of putting his nuclear forces on heightened alert. Well, that certainly got everybody's attention, and we monitored that very closely. What I would tell you is we look at it every day, the nuclear strategic situation, and we haven't seen any reason to change our strategic posture in the United States. We're very comfortable, very confident that that when it comes to a strategic deterrent posture, the United States is prepared to defend the homeland as well as our allies and partners.
When you look at the risk calculus, we're talking about chemical, biological, and nuclear potential weapons. How do you rate that risk?
Well, first of all, the stakes are very high when you're talking about weapons of mass destruction, just because of the kinds of damage that they can do. And so there's nothing more sensitive or taken more seriously in the halls of the Pentagon than looking at what our strategic posture needs to be on any given day. I mean, because the stakes and the risks are so high. I would like to come back, though, to the central point, which there's no need to there shouldn't be a need for us to be worried about this or concerned about this if Mr. Putin would just do the right thing, negotiate in good faith with President Zelensky, and end this war.
But it looks like he's bogged down militarily, and he's digging in his heels. He's feeling the pinch of the sanctions a little bit, not so much yet. What are his options militarily from your lens, now that he's kind of cornered?
The best option right now would be to sit down in good faith with the Ukrainians and work out a negotiated settlement and get his troops out of Ukraine. That's the best option. Short of that, what we're seeing them do is increasingly go on the defense now. They were on the offense in the first couple of weeks of this war. Now we're seeing them pushed back by the Ukrainians. The Ukrainians are moving from strictly defensive posture to offensive posture because they've got the security assistance that keeps coming from the West, from the United States. They have a sense of momentum, and the Russians themselves well on the battlefield, and we have indications of low morale, poor leadership, not great command and control by their senior leaders. So the Russians we're seeing in some places, particularly around Kyiv, are now settling on the defense rather than the offense.
When it comes to the assistance to Kiev, we heard from President Zelensky, or you did, inside the NATO meeting. He addressed NATO leaders. He criticized NATO leaders for not delivering a no-fly zone and also for not 1% of the defense of the collective NATO members. What more can the U.S. do?
I'll tell you, we're doing a lot more. The president just signed, as you well know, a week or so ago, another $800 million. That brings to $2 billion in President Biden's administration of security assistance to Ukraine. $2 billion. And we are already starting to deliver on that $800 million that the president just approved. It'll start arriving here in the next day or so. Some early articles have already started showing up. And what's important here is the kinds of things the United States are giving to Ukraine are the kinds of things they're actually using very effectively. Short-range air defense. We're working with allies and partners to get them long-range air defense, body armor, small arms and ammunition, Javelin anti-tank rockets, Stingers, which are helping bring down Russian aircraft. I mean, we are very actively engaged in helping them use the kinds of things that they are trained on and know how to use. And this is another point that I think gets forgotten, and I want to just say, over the last 8 years, the United States, the United Kingdom and Canada, other allies, have been training Ukrainian armed forces. So everybody's focused on the stuff, but I think we need to remember that the Ukrainian armed forces are doing so well, not only from their own bravery, clearly they're brave, but because they have been well trained over the last 8 years.
But why before the invasion it wasn't considered escalatory to send in weapons like MiGs, and now it is seen as that would be an escalatory movement?
I'm glad you asked that question. One thing is for sure, the United States has not put a veto on other nations who may want to provide aircraft to the Ukrainian armed forces. President Zelensky says he wants them, and individual nations can make those sovereign decisions. The proposal that the United States did not agree with was the idea of transferring to the United States custody for the United States to deliver them.
So
and
this
two
is
reasons.
about no one wants to be the final hand to touch them into Russia.
I wouldn't say that, not at all. For the United States, we're focused on providing the kinds of materials, as I said, that we know they're using very, very effectively, and the most effectively, and that's coming from air defense systems, both long and short range, and so that's what we're focused on. Now, our intelligence community made an assessment that should the United States, not other countries, but should the United States provide fixed-wing fighter aircraft, that could be misconstrued as escalatory in Mr. Putin's mind. And I think we can all understand, given that we're talking about two nuclear powers here, that we don't want to run unnecessary risks in terms of escalating.
Speaking of escalating, I know the administration has said it would be escalatory for a no-fly zone. But we've seen American journalists die in Ukraine. We've seen 10 million people displaced. Yeah. It's a huge number.
Yeah.
What would it take for the United States to agree to a no-fly zone?
The President of the United States has made it clear that U.S. troops are not going to be fighting in Ukraine, and that includes in the skies over Ukraine. And again, so I want to make a couple of points here. I mean, a no-fly zone sounds like a nice policing effort. It's not. It's combat. You have to be willing to shoot and be shot at. And that means you're also going to have things on the ground to support your aviators in the air. Again, the president's been very clear that we're not going to have U.S. troops fighting in Ukraine because the risks of escalating this between the United States and Russia, making this a war between those two countries, is far too great if you try to execute a no-fly zone. And I would argue that many NATO nations feel the same way about putting their pilots in that harm.
I think we lost connection there with Brussels. I think that's pretty obvious. Bloomberg's Anne-Marie speaking to John Kirby, the Pentagon spokesperson. If we can re-establish that connection, I'll go back to it. You heard a series of questions there about a no-fly zone, what it would take to send more weapons into Ukraine, and whether sending the MiGs is a so-called escalatory step. Hopefully, we can get back in touch with Brussels and continue that conversation. But from me, that does it for me. From New York City, this was the countdown to the Open. This is Bloomberg.
Bloomberg's The Open is brought to you by Grayscale Investments, building the future of financial legacies.
Wakey, you two.
What time is it?
Oh, not now, Danny. Dad, you want to miss out on the crypto revolution?
No, I want to grab it by the horns with Grayscale Investments.
Oh, good answer.
Grayscale, building the future of financial legacies.
Investing with a global manager or a boutique specialist. At Franklin Templeton, it's not or, it's and.
No one wants your business to succeed more than you do. But at Patriot Software, we come close. Because when your business succeeds, our country gets stronger. That's why we built our award-winning accounting and payroll software for American businesses. We want you to succeed.
This chip shortage is going to last longer than many people believe, likely straight through this year, and I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them, to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fiero took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees. But for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fiero continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fiero's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue a warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning 1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic they had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack on the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise
if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of two suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venegold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
You find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance, is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities and the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't. And the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people like want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Tech in right up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just like attacked that video and were like, you explain things so much better than my boyfriend or my professor, or like I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You know, you do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of, squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now, clearly this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote-unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen-grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwits, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts. In less than a year, the company's stock has jumped from less than $3 a share to almost $350. Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign. The ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
The GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that they're interested in how retail brokerages make money and whether they're keeping the best interest of their customers in mind, but it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are and they're willing to jump on and, ride it.
So whether it's meme stocks like GameStop Meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs to the newspapers or online retailing to brick and mortar. They come in and they're in the same business, but they just do it in such a gigantic cost savings that it causes everybody to switch. Well, that's the risk that happens here, is that it's so much cheaper to just manage your own money. We're not there yet, but costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been written.
Meet Bloomberg's own David Nicholson. Now, his happy place is out in the field, on the open road. But like the rest of the world lately, he's been working from home a lot more than he's used to. COVID-19 has prompted a massive urban exodus as professionals of every ilk yearn for more space to live and work. As a result, rural areas have exploded, and they're poised to experience a resurgence as more and more families pack up and leave the big city to try out life in the burbs. But there's one problem with that. Not all internet speeds are created equal. Anyone who might need to upload or download large files for a living may not want to pack up and move to that cabin in the woods just yet. Now, David's house isn't a cabin, but it is in the woods, and inexplicably, his internet is workable.
My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
It's usually under 2 down and under 0.2 up, so it's often unusable.
Some days it's around 1, and other times it'll drop down to about 0.2, 0.3.
I just want to be able to have internet at my house without having to go outside the normal ways of acquiring internet. It's really frustrating.
We're literally miles, a few miles away from downtown, and it just cuts off.
This is a problem, and the solutions are not there yet, because getting high-speed internet in rural areas en masse is something our providers may simply not be ready for.
If your internet service doesn't have fast download and upload speeds, then you don't have high-speed harmony. You have.
Americans on average pay about $70 a month for internet at home. But in rural areas, it could cost a lot more for a lot less service.
So the pricing for a fixed wireless provider here can be something between $80 and $150 for about 25 megabits per second. However, gigabit service, which is 1,000 megabits per second and symmetrical, is running at about $119 a month or $130 a month.
That's John Paul. He co-owns Spiral Fiber, an internet service provider here in Nevada County, California. And for the past 10 years, he's been trying to bring an affordable fiber optic network to town. It all started when he applied to be part of the pilot program for Google's fiber service.
Across the country, civic boosters have been going to extremes, chanting, singing, Google in the morning, and marching, trying to get the search engine giant to look at their town.
The internet these days is crucial to be in the world, to be a part of the world, and to be connected to your community.
Google ultimately went with Kansas City, Missouri, which left Paul on a mission to get funding to lay out fiber optic networks for gigabit service. Over the next several years, he would attend conferences and pitch venture capitalists and apply for grants to make his vision come to life.
One of the biggest roadblocks to building infrastructure for the internet here in the United States are the existing large providers. They have their land staked out. They would prefer that nobody come in and compete against them. In 2013, we applied for a grant. We went down and met with the commissioners at the California Public Utilities Commission. It was an arduous process to get funded, but we finally did against all odds. We got a $16 million grant, and then we went out to seek venture capital.
Then, in March of 2020, the pandemic hit the world.
Everybody got locked down, and everybody came home, and everybody started using the internet. And I remember seeing on one of the local fixed wireless providers' websites, they've said, hey, we know you're all staying home, but please don't use too much video, and please don't use too much bandwidth. And I thought, that doesn't work.
The U.S. connectivity gap is far greater compared to countries that are considered its peers economically. Some developing nations actually have better internet than rural America, like in Kenya, which has a state-of-the-art fiber optic network fed in from their coastline. The American connectivity gap does largely affect rural areas that are either outside of service coverage or simply prohibitively expensive. This is Rebecca. She and her family moved to Nevada County just a couple miles down the road from David. They took for granted that high-speed internet would just exist in the area, and it's not something they even bothered to check on before buying their house. Turns out, all they got was dial-up.
We wanted to move where we had a little more space, room for the kids to run around, just be out in the mountains a little bit more. Having come from a bigger city area where Wi-Fi is pretty readily available, we hadn't really considered that in our purchasing of the house, whether that would be an option or not. When school started, and now that we are remote learning with our children and we're doing everything from home, we didn't have the option to do that at our house. So every day when school would start, we'd have to pack the kids up and we'd go to my in-laws' home. They have a little cabin up in this area that does have Wi-Fi already.
Rebecca's situation is the norm in rural America.
According to data from the Federal Communications Commission, just 4% of urban Americans lack access to broadband internet. That's compared to almost 40% of people who live in rural areas. While that was the case, there were also racial and socioeconomic divides in terms of who had that access. In addition to that geographic difference, low-income African-American students, Latino students, and first-generation college students were more likely than others to have only one device at home that's shared among multiple siblings and or lack access to that actual connection.
For most American towns, there's also a lack of competition, forcing internet prices up. And large providers like AT&T and Comcast aren't incentivized to expand service to these rural communities.
This is how Xfinity makes life simple, easy, awesome.
So in our area, we have a small imprint of Comcast, but they're not going to go out to the more rural areas. It's just not cost effective for them to do it as a large company.
In order to lay fiber cable, you're actually physically digging trenches into the ground. And for internet service providers, they're primarily focused on maximizing their profits. And so the fewer customers you have, in any square mile and the more fiber you have to lay, that's just kind of harder to pencil out from a purely economic standpoint.
AT&T released a statement on the matter, expressing the need and desire for government assistance to fund fiber optic expansion to areas deemed unprofitable. Comcast released a similar statement encouraging more public-private collaboration on this effort. Federal agencies do offer grants to help communities build broadband networks, but many have argued that there's not enough flexibility on how to use these funds. The COVID-19 relief package passed by Congress in March and signed by President Donald Trump awarded $43.3 million to 51 projects on the East Coast alone. But it also stipulated that these projects needed to be up and running by December 30th. For contractors who plan projects months and years in advance, it's a scramble to rearrange their schedules to meet that deadline.
So what we've been asking the federal government to consider is at least have, as long as the projects are getting started, knowing the projects are being put into place to expand both remote learning, working from home, and opportunities like that that are truly driven from COVID. We're moving as fast as we can regardless, but hopefully they'll give us some more time.
Talking to John Paul, it's clear that he believes broadband is something that can transform a community and should be considered a public good.
One of the first communities to come on in the United States with full-on gigabit service was Chattanooga, Tennessee. Now, they're a bigger city, but they're a city that was economically in a downturn. In the last 15 years, the city of Chattanooga has turned around in an amazing way. It's a nexus for young people to move to. It's a place where technology happens.
It's not just about logging on to Zoom, to connect with your colleagues who might be in New York City. It's also your ability as a small business, operating in the town of Nevada City or wherever it may be to, quickly upload your payroll documents or something onto the cloud, or to quickly, swipe a customer's credit card. There's just some really basic business functions and mechanics that I think people in big cities really take for granted, and that are just going to be a much bigger challenge for small business owners in rural areas.